So now I said I'll be explaining, I've explained the different type of liquidity, blah, blah, blah. Don't worry too much. We are still going to be coming back into it in other classes when I start to talk about other confluences, okay? Well, because we still have a lot of confluences to talk about. So now, and we are still going to be doing the summary of every system that I've explained. So you guys would know the main thing to focus on properly. So now, I have said, let's say you call this an inducement. It's summary, right? Before you can say you want to sell directly from here, this guy must be what? An inefficiency as a result of an own mitigation, right? That is where you can sell directly from an inducement, because you felt like, why would market get close to filling this gap, but it ignored it? So why would market? So that means this is an inducement. It is a trap for people that are trying to sell this move. So which is why you can sell from here. This one is easy, right? So let's now go to the confirmation one. This one that you have a high, low, high, low, high. Then market come inducement whatsoever. Then there's nothing here. There's nothing here. This one is just a mitigation, right? Okay, let me redraw it again in a better way. High, low, high, low, high. Break of structure, then you have this. So this is a normal mitigation. But let's say this now is now one of the liquidities. So I want to explain the different types of entries that we can use. I'll be explaining 3 or 4. So now, this is the regular one that people do, Quasimodo or whatsoever, but that is not it. So now, because I can just come, purge your Quasimodo and keep going and sell, right? We don't care. So as a smart trader, what will I do? I would mark this guy. I would also mark this guy. Listen attentively. This is liquidity as a result of why you marked it. Probably session liquidity or whatever liquidity you want to call it. And this one too, you know that this guy is mitigation candle. So which makes this guy also liquidity. Right? So now, which means these 2 points, I will mark it out. So now, this is now where my confirmation comes in. I know this guy is a swing point for some people. And I know this guy too is a swing point. So now, let's say markets now come. I've explained this one. Markets come. A rally base and a rally. Then I'll wait for market to do what? Break structure with volume. Remember, break structure with volume. It did not clear this IO. Break structure with volume, pull back inside, incomplete pullback, then drop. Then what? That has given us an ABC. Then we can sell directly from here. This is a reaction that you can use for any sort of inducement point. Once you have this, after any type of inducement, you will take that trade and your target will be where? The origin of that push that came for that inducement, which is this guy. Which is why I said external to what? External. They grab external, they will target external. Okay? But internal to internal. So which means external to external. Listen attentively. Final target. Internal to internal. BE level. Which means once they have taken out this ABC, which is the internal liquidity as at this point in time. But remember, if this thing is a big diagram, what will I call it? I'll call this external liquidity and sell off. But because this is in a smaller time frame, as a result of a reaction of this external liquidity, we'll call it an internal. But we know that, so that's why I used to tell people that forget about internal, external, blah, blah, blah. What you want to focus on is they took out this guy, which is the liquidity. So now the target will have to be this low. So which is, if you get it based on this lower time frame confirmation right here, your market cannot, once it breaks this low, you are already risk-free on your position. But you know that this is your final target because you know anything that make market now does this again, then what are you doing? Doesn't make any sense anymore. So you rather let it stop you out at break even, and even if it wants to go your way to break structure, then you can enter again. So why try to panic? So I come again. This is your final target, which is the bigger external liquidity. And this is your break-even level, your smaller external liquidity. That is type 1. Type 2 is when you have high, low, high, low, high. The same thing. I'll be using the same thing. Then you have this. The markets come. Then it comes as a pullback. High, low, high, low, high. Then you have inducement. Then they took it out. This is your second liquidity, remember. But now, what did I tell you guys about true break of structure? I told you one that break two structures, or when you have high, low, high, low, high, and you have a protected low, bracket break structure, then you take out the protected low, then you have a true break of structure. So now you expect price to come down, take out this guy, then you can sell off from here. So it is now, so where will your target be? Break even level. Final target level. But this one here can also decide to come in form of ABC too. It might come as an incomplete pullback right here, sell off, then come back for it and sell off too. Any form that it does. But I shall know that this up right here is protected. That is the second form. Are you guys getting me? The third form is this. High, low, high, low, high, low, high. Break structure, pullback, liquidity. I want to finish this example before I go to other examples. So I want to finish this particular pattern example before I go to other things. Now this, high, low, drop, base, drop. Then this base, you wait for the normal flip of it. Then you reclaim it back as your entry. Like a violation block. Okay? Your entry right here, your break even right here, your final target right here. So now, the final one is now this, which is candle confirmation entry, which is high, low, high, low, high, break of structure, then inducement, then you wait for market to get here, create a candle above this guy, but did not close above this guy. Now close below this guy. So I'll enter from here at the beginning of the new candle right here. And my stop loss will be right here. So this is candle confirmation. So which is what you call the pin bar. But remember, this guy must not close above, it must not close above this candle. So it has to be a pain bar. So your entry will be right after the new candle has opened. And your stop loss will be right here. That is the another type of confirmation that you can use. Right? So now, I haven't seen all this type of confirmation. I have been using this particular drawing. What this now tell you is, it is not necessary that it has to be this type of pattern. What I'm just trying to tell you that I am assuming that all these highs are liquidity. They can be anywhere. It can just be like this. Previous session high, previous this high. What are you expecting to do before you want to trade them if there's no liquidity, if there's no inefficiency above them, is using this or this or this or this and some other ones that we are still going to be talking about. So which means it can be anywhere. It can just be a single push like this. And you know that this is the previous session liquidity. So once you talk about session, you will understand them much more better on how to use them. Again, based on session, right? So anytime, anywhere that you feel like, oh, this is an inducement to, remember, I didn't say liquidity. Will you feel like this is an inducement to, but you don't have a point to justify it above it. These are the confirmation you need to see to get it on that trade. This is your guide. Any type of liquidity that you anticipated, if it is not as a result of an incomplete pullback, then this is your guide that you are waiting for. Now let's go to the chart. I'm coming on. So now, so where can I start from? Okay, come in. So look at this. Previous session low. Previous session high. Incomplete pullback because we have a fair value gap inside here. And this guy is responsible for taking out this structure that breaks structure here. So I can take my entry directly from here without what? Confirmation. I can take it directly there without confirmation. Now, but look at this one here. I have previous session right here. Previous session right here. I am looking to buy. So for me to buy this push, nothing is telling me that there's an inefficiency here. But I know it is going to buy. So what am I going to do? I need one of this type of confirmation. So, and again, market is not necessarily going to turn immediately. It can move above it a little bit before it gives you that your pattern that you are looking for. It's not like it's just going to be like just a few pips. No, it can move above it, far away. So now looking at this one, no single imbalance here. So what did the price do? The price created a fake break of structure here. Took it out, then give us a true break of structure right here. So after that true break of structure, what do you notice? Market came back to take care of this liquidity as a result of an ABC pattern. Let me go to 5 minutes. Look at that. As a result of an ABC, took out of this liquidity, then come to this other block right here to buy. Why am I interested in this buy? I assume that this guy is a sort of liquidity and is an inducement because I know that this sell is not going to hold. So for me to anticipate that, I look at where this guy is coming from. I feel like it is a valid POI, but there's no imbalance, which means I cannot take this trade directly because there's no imbalance to justify my move. But now market tap into that guy, break several structures, give me my confirmation after this guy. Then I entered from it. Like I told you, it can be session liquidity, it can be external liquidity. When this guy broke structure here, it has become an external liquidity. So market break it back to the upside, pull back, then it bought. Let's look for more. Let's look for more. Let's look for more based on session. Now look at this. Let's use this as an example. But once we talk about CHoCH section, you understand it well. Because then you will not be waiting for what is not lost up and down. Now, this is previous session liquidity right here. But we already have this big candle, which if we go to a lesser time frame, you will notice that it is an imbalance. Right? Because this shows that there is an engulfing candle right here. So, previous session liquidity, they took it out. I probably get my entry from here. But let's say that did not work out for me. I decide to be much more patient. How will I have gotten in? Market took out previous session liquidity, then it broke structure. Then I will have gotten from this guy right here. So which means if I am in a bullish market environment and market has a sort of liquidity like this, let's say I'm in a bullish market environment and this is the previous day's low or previous session low or so ever, market took it out and it breaks structure, then I can buy from here. Because this is not just an external liquidity. It's an external liquidity plus probably session liquidity or previous day liquidity. External liquidity alone is good, but having it as a confluence with other type of liquidity make it much more stronger. Then I can buy from here. This is the type of the thing that happened here. But if you had wanted to take it directly, that is why I say external to external. Let me show you how you would have gotten in. Let's go to 3 minutes. Okay, let me make this big. I'll use this to explain the last thing I want to explain now. Because, let me tell you, let me annotate it first before explaining it. Because a lot of you make that mistake a lot. Now, pay attention to this. It will change some of your mentality. Okay, let me draw it here. So let's say you have, notice this drawing. Oh, let me remember. Okay. High, low, high, low, high. External liquidity. Everybody know this pattern. The market will come back to this protected low and buy. But if you are an inducement trader, this is the move you want to catch. Right here. Not this one. And this one is much more high probability than even this one. I will explain. And a lot of you get caught up by, let's say this is your final target. 100% market will get here as you planned. But you have started to get in from here. And you put your targets here. Most of you will have noticed that, I want you guys to relate with me if you notice. Can you guys see my, when I don't see anything, I don't die. Sorry guys, sorry. Can you guys see my screen now? Can you see it now? Can you guys see it now? Can you see it now, guys? Okay. So let me draw it again. Let me draw it again. Sorry, guys. Sorry. Let me draw it again. I said everybody is common. Everybody knows this. I want you guys to relate with me here. This is going to answer some of your questions. High, low, high, low, high. Everybody knows this pattern. Common pattern. Protected low. Then buy. So now, you get what I'm trying to do. Now, as an inducement trader, this is where you want to get in. But you guys will have noticed something. Let's say You have a POI here now. You wanted to, you pick a particular trade, and this is your final target. You know that market will reach this final target though, but this is where you got it. What will you people notice? You notice that you will take that trade from here, you will be happy. But market will get here like this at some point. It will not start retracing far. Probably take you out at break even, then it will go and eat your take profits. We have experienced that several times. Who have experienced that several times. It has happened to a lot of you people, I can bet. And it happens most likely when you try to get in from, when you trade this pattern, this particular pattern. That is when it happens the most. You have your final target, oh, yeah, but market will get there, but it will come. Now come back far. Now get back to your target. But by this time, you're already scared. You might have closed the trade. Why does that happen? I will explain now. That's why you need to understand external to external. Now, if you are trading an inducement entry, your target is external to external or internal to internal. Your target is not to a POI. Your target is not to a point of interest or to another external liquidity, which means if you get in as a result of ABC pattern right here, this is your target. After you now have your target, what are you supposed to do? You get out right here, or probably take out 80% of your position. Let's now draw this out. Look, I want to explain it professionally. I, low, I, low, I. Market come here, draw, inducement, take it out, come back here. You get in from here, then it's buy. This is going to be your target. You're already out from this setup, external to external. Now, if we now put this drawing to a single drawing, this is what you will now have. I, low, I, low, I. Boom. Protected low. This is what you have in a single drawing. So, which means you can get it from this trade right here, get the fuck out of here. Then, market will now come back. Remember, this guy is a break of structure and a pullback, external liquidity. Then you will get it from here for another entry to now target whatever POI that you have above. This is the move that will get there with less pullback. Because now, this move does not have any external liquidity to come back for under again. So it will just come and surge, boom, it will rally to the upside. Because this circle has been completed. Now, this is a protected loop. So anything that makes it want to come back as far as this, it might clear it. So if this, your bias is true, they would come and fly to your TP. Okay? So that is why you need to know when to get out and how to reposition yourself again. If you are trading an inducement entry, don't use it to target a far away POI. It is external to external. Get the fuck out. Then once you give you your protected highs and lows, you can take a re-entry from there to target wherever you want to target. Am I clear? So any of these entries that I explained here, your target is what? External to external. Look at this diagram here. If this guy broke this structure, remember this is now a protected high right here. Market will come back here to sell. So, but why would I make a lot of profits here and I'll still wait for market to come this far? What if I decide to now take a loss here? So I will take my TP here or take major volume out here, then reposition myself here again. But if let's say I was not here on this trade, this will have been the trade I will have taken. Because this diagram now will now be high, low, high, low, high, break of structure, pull back, break, protected high, break of structure, mitigation sell. This is how it will look like. But you have gotten it from here. You have taken your target from here. You reposition yourself and get it again from here. Am I clear, guys? Am I clear? Nobody. Are you with me, guys? So now let's go to the chart. So now, I want us to investigate this guy for you to see what I'm talking about. Let me go to 3 minutes. There's still something else I will teach you guys again. It's like a trick too. Oh, network today. I'm trying to load this chart, but it is very, very slow. Fuck. What's happened to this network now? Yeah, don't worry. Like I'm trying, don't worry, you will see it. Yeah, I'll teach you another confirmation trick. I call it 3 formation candle. It works a lot. I'll explain that to you guys in the next class. Yeah, the screen is slow. I'm coming, guys. I'm coming. Let me explain this, then I will take in questions. Okay, let me share the screen. Oh, why is it that this ending part, the network now decide to be slow? What type of network is this? Guys, this network has decided to be slow. Are you guys there? Oh my God. I want to use it to break down. Can you guys even see my screen? I should try the web. Okay. You can start the videos. So let me, okay, yeah, I think it's loading already. Okay. So now, looking at this particular entry now, this is the last breakdown I will do. This guy broke structure. So which makes this guy an external, right? So if this guy is an external, pay attention. External liquidity. Liquidity 1. Under the external liquidity, we also have the previous day liquidity right here. Liquidity 2. We now still have Asian low, liquidity 3. So market rated this guy as at New York session. So the market is done for that day. So a new day opened. How will I analyze this? I will analyze that this New York took out external liquidity right here. But they can't decide to start buying because the session is already over, right? So now, we now have the previous day's low. This is where they ended it. So after having the previous day's low, Asian session came, it cleared it. So after Asian session, what session is the next? London. So London came, took care of Asian session, then it broke structure. So it used Asian session as what? Its own external liquidity right here. So it took it out, break structure, right? I got in from here. So where would I have my target? Remember, this is the final target too, because this is the origin of what? Of this inducement leg that we are trading. This is the trap that broke this false structure. This is where a lot of people has been fucked up. So this is the origin of it. So this is my final target, right? So if this is my final target right here, I hope I'm not even speaking gibberish. Let me draw it out. High, low, high, low. Then we have a break of structure. Then we have this break 1, break 2. The market came, clear it. So this is my target. So anything that happens here, I still have my final target right here. So this is this drawing from this up to this low. So now I got into my first entry here. What will be my first target? Because I'm trading based on this external liquidity of Asia. So I took my entry right here. My target has to be what? After a new high has been created. So they created a new high. So imagine that I just held the trade. I got in around here. It now got here. I was expecting it to hit this target. Look at how market came back before buying again. So you will have been stopped out at your break even. Now you'll be frustrated. Okay, so me getting in from here, I get out from here after market create a new high. Me getting in from here now, I know that there's nothing this market wants to do. If I am right, it is going to create a new high, and that new high is closer to this liquidity, which is my final target. So I'm not just going to put my TP at this new high. My TP will not be this external liquidity. Am I clear, guys? Am I clear, guys? Ó ti dogun díẹ̀díẹ̀. Oh, good. It is a story. All of you will still see. After watching the video, let's say you are still having some few difficulties. Other classes, I am still going to come back into it. Okay? So I think that will be that about that. I've literally explained session. I've now explained order flow with session again. But I will still emphasize on this particular topic again, because I feel like it is very, very important. So our next session, I will be adding order flow with session together. No, order flow with liquidity. I'll be adding order flow with liquidity. So that's what we'll be having on our next session, where I'll be emphasizing on this type of thing. So which is what you'll be seeing on your daily basis activity. So I'll be emphasizing on it more. So remind me, our next session will be what? Order flow with liquidity. So I think that will be that for today, guys. I am extremely tired and I need to rest. So thank you guys for coming today. God bless you all, and we meet in our next class. Moving the network there because it's frustrating. Huh? I can't even close the Zoom.